first half of the year, we saw deal flow down 60% year over year for multifamily, 57% for office, and 41% for industrial, which surprised me both on the multifamily sector and on the industrial sector. But now as we see issues within the marketplace and the low maturities on floating rate debt and multifamily, that's starting to present a little bit more of a problem, coupled with the fact that although there's liquidity in the multifamily market with Fannie, Freddie, and HUD, their rates have gone up tremendously given these additional increases in interest rates. So in the second half of the year, I expect it to be very similar to the first half, and I think this will probably even be the same or very, very close to it for the first half of 2024.
So in 2024, first half of 24, I see transactions increasing. So in 2023, depending on exactly where the year ends, you're going to see primarily transactions down 60 to 70% for the year, versus 22. I think transaction volume in 24 is going to increase. I don't think interest rates the 10-year Treasury is going down, but what I do see happening is I see it stabilizing. And if it's stabilizing, you're going to see more transaction activity, which is healthy, because then you see marks in the market. You'll see actual transactions. It helps, investor certainty, and you're actually going to see new investment. And some of it's going to be opportunistic investment, certainly, but you're going to see investment, and that's the most important thing in the real estate space. Yeah, no question about it. I do think certainly product types will vary. Retail has really held up. We've seen transaction activity hasn't been as muted as it has for the other property types in 2023. I think that will continue. Grocery-anchored retail continues to be the darling of retail. From an office perspective, you're likely to see distress. That said, that distress will work through the system, and you're going to see some opportunistic buys on projects. From the multifamily side, I've even seen it in the last 60 days. I'm starting to see more transactions. For borrowers that had floating rate debt, they are trying to go to market and try to exit assets. So I'll see some opportunistic buys there. And with multifamily, you always have Freddie, Fannie as a backstop with that debt that right now is 6.5, 6 3/4. But that is a real advantage that multifamily has. And for industrial, it's the preferred asset type. The major institutions are essentially recycling their capital out of office and investing it in multifamily and industrial, but industrial being an asset type that doesn't require a ton of ongoing capital, and capital is expensive right now. I do see the transaction activity picking up even more in 2024 for industrial.